You hear it all the time, right? AI is changing everything. But how is it actually moving the markets? Like right now, today. In this explainer, we're going to follow the money. We'll start with one single explosive stock surge to get to the bottom of the real story behind the AI boom. So let's dive in.
All right, here's the game plan. We're starting with a massive 30% single-day stock surge. Then we'll zoom out to what's being called the AI gold rush. After that, we'll see where all this tech is actually being used, from the shopping mall to the military. We'll touch on the bigger economic picture that's fueling all this, and then we'll get to the big one, the next major test for this entire trend.
So it all kicked off with this one event. And honestly, it sent a shockwave through the market. Think of it like a single spark that hints at a much, much bigger fire that's burning in the world of AI.
Okay, just look at that number. Plus 30% in one day. I mean, that is a huge move for any company, right? So you've got to ask, who was it? And maybe even more important, why? Because this isn't just some random number on a screen. No, this is like a giant signal flare lighting up a really, really critical corner of the AI market.
And the company's name is Vicor. Now, you've probably never heard of them, and that's kind of the point. They don't make the cool, flashy AI software that you and I might play with. Nope. They make the really specialized high-performance power components, basically the stuff that AI data centers need to even turn on. Without them, nothing works. So a 30% jump in their stock, that's not just good news for Vicor. It's a huge signal that there's massive, and I mean massive, demand to build out the physical nuts and bolts that power this whole AI revolution.
And that signal from Vicor, it leads us straight to this classic idea in investing, the AI gold rush. You know the story, right? Back in the 1800s, the people who really got rich during the gold rushes weren't the ones hoping to strike it lucky. Nah, it was the folks selling the picks and shovels to all those hopeful miners. Well, believe it or not, the exact same thing is happening right now. Everyone's getting excited about the flashy AI apps, the gold. But the really smart money, at least for now, is flowing to the companies making the picks and shovels, the essential hardware, the infrastructure. They're the ones selling the tools. They get to profit no matter who finds the gold. So, who are these new tool makers?
Okay, let's break down the major players in this ecosystem. First up, you've got the undisputed kings of the chip world, Nvidia and AMD. When their earnings come out, everyone's watching GPU demand. It's basically a health check for the entire AI industry. Then you have the giants, the big spenders like Meta and Alphabet. They are pouring literally billions into building their AI capabilities. What we're watching for them is, does all that spending actually show up in their ad revenue and cloud divisions? And then, of course, there's Microsoft. Their whole game is weaving AI into the office with tools like Copilot. The big question there is, are companies actually buying in and using it?
All right, so we know who's making the tools, but where is all this stuff actually going? Who's buying all these picks and shovels? This is where it gets really interesting because we get to see how all this incredible computing power is being used out in the real world.
And listen, this isn't some sci-fi 10 years from now kind of thing. We're talking about Gap. Yeah, the clothing store. A company you'd see at any mall is already using Google's top-tier AI, Gemini and Vertex AI, to completely overhaul its operations. I mean, this is the perfect example of AI jumping out of the lab and straight into the real economy, changing how a classic, traditional business works from the inside out.
But using AI to sell more jeans is just one part of the story. There's a whole other side to this AI race, and it's much more strategic. You see, while the West is really focused on commercial uses, business tools, consumer apps, in the East, it's a different game. You have companies like China's DeepSeek AI that are pushing into military applications. We're talking about things like smart drones and advanced robotics. It just goes to show you that this technology can be used for very different purposes, highlighting some pretty fundamental differences in priorities. Okay, let's pull the lens back one more time to the biggest picture. None of this tech development is happening in a bubble. There's a massive economic force at play here, and it's basically acting like rocket fuel for this entire AI trend. So check this out. This week, we're expecting both the US Federal Reserve and the Bank of Canada to cut interest rates. Now, why does that matter for AI? Well, it's pretty simple. When rates go down, money gets cheaper to borrow. And if you're a giant tech company that needs to spend billions, and I mean billions, on new data centers and chips, cheaper money is exactly what you want to see. It's like the financial system is giving a green light to go spend even more on AI.
And this brings us to the big question hanging over the entire market right now. For what feels like forever, investors have been holding their breath, waiting for the central banks to finally pivot, to stop hiking rates and start cutting them. So, is this it? Is this the moment we've all been waiting for? Because if it is, that could unleash a whole new wave of investment, and you can bet a huge chunk of that cash is going to be aimed directly at AI.
Okay, so that brings us right here, to the moment of truth. You've got the hype, you've got the crazy stock moves, you've got cheap money potentially on the way, but now all of it has to face the ultimate reality check, and that is corporate earnings.
This week, all eyes are on the big dogs, Microsoft, Meta, Alphabet, Amazon, as they report their numbers. And here's exactly what we and everyone else on Wall Street will be looking for. Number 1, capital expenditure. Are they still writing those massive checks for AI? 2, what are they saying about future chip demand? That tells us where things are headed. 3, how's ad spending? That's our canary in the coal mine for the whole economy. And finally, the billion-dollar question, maybe the trillion-dollar question. Is all this AI spending actually making them more money? Is it paying off on the bottom line?
And so all of this leaves us staring at the one question that defines the market right now. Is this a real AI boom or just a giant AI bubble? I mean, the evidence for a genuine revolution is everywhere. You see it in the companies building the hardware, you see it in a retailer like Gap totally changing its business, but at the same time, you see these stock charts going vertical, maybe fueled by the prospect of cheap money, and that's a classic warning sign. Now, this week's earnings reports aren't going to give us the final answer, but they are, without a doubt, the most important clue we're going to get, and you better believe we'll be watching.